Hello and welcome. In this video, I'm going to share the 7 things you need to know when remortgaging your property. Very important. When it comes to remortgage, you need to know where you are. So I'm going to share these 7 things or 7 tips you need to know to exactly be able to remortgage your property efficiently and efficiently as well. Before we get going, if you like this episode or any of my episodes, don't forget to hit the like button below, subscribe to our channel for more of these amazing tutorials. So let's get to it. Knowing these 7 things, right, would help you remortgage your property in a way that is not stressful, it's stress-free, and you don't have to worry about it. The number one thing you need to understand first is basically what your credit score is, okay? It doesn't mean that because you have a property now, your credit score is good. It might have gone down. Maybe you only got one mortgage, you haven't got credit cards, and you've not been boosting your credit scores because you may not be using credit cards. So again, you need to know where you are because that would help you a lot. The benefit of having a good credit rating is that you're able to have favorable interest rates, okay? Because what the vendors or what the bankers would do, they would know that you're not risky to invest in, okay? If you got poor credit rating, you're more risky to invest, so which means they will charge you higher interest rate or they may decline you. So again, you want to make sure you are between good or excellent. If you're in excellent, you have a massive exposure to the lenders. So again, very important to have good credit rating because that would help you put it in a better position. The second thing we need to think about also is our debt to income ratio, right? How many debts do you get versus your income? If you have a portfolio, if you're a portfolio investor, again, you have to know what your outstanding mortgages are and what the income is against those mortgages, because your debt to ratio really important, because this is what the bank use to actually see if they're able to lend you money or not, and also understand whether you can afford to pay back their money when you take the loan. So what I do just to set myself in a better position, I always allow my property income to be 5 times more than my mortgage interest payments. Okay, my property rental income should be more than 5 times of the mortgage payment. Okay, again, that then rubber stamp, it puts me between that debt good debt to ratio status, because then I know then basically I'm not leveraged. The bank will not see me as a risky investment. So very important to ensure your gross rental income is 5 times more of whatever your mortgage interest would be. So again, go and do your analysis to understand that before you even think about remortgage. And again, I got a student of mine who bought a property before they actually met me. So they bought this property in a very not good area, and the rent is significantly low. We want to remortgage so we can pull some of our investment out, but because the interest because the rent the tenant is paying is so low, we were unable to actually pull the money out. So again, it's very important. Again, that goes without saying. Always increase your rent every month, every year. Increase your rent gradually, because if you don't increase your rent, your tenant will be paying below market rent for a very long time. Again, he's an old school investor. He doesn't normally remortgage. So when he understand what I was doing, so we wanted to pull invest. So we really struggled. Okay, the only way we were able to do a remortgage in that property is basically asking the tenants to live gently, refurnish the house, and then obviously remortgage. But it was difficult situation to be in, and I wouldn't advise you to be in that sort of situation. And again, if you like this episode, if it's making any sense, share it with friends and family so they can learn themselves. The third thing we need to think about also is refinance cost. How much does it cost us to remortgage our property? Okay, we need to know what the legal cost is, the mortgage cost is, if the bank is going to charge us for doing valuation, and then obviously how long it would take as well. So whatever the cost is on your remortgage, you need to factor that in, and then for you to know how much it would cost you exactly before you even start thinking of remortgaging it, because that then allows you to go and find reasonable professionals to actually work with that will reduce your cost. If you remember, it's a business, okay? it's an investment. You want to get good price at better quality. So again, this would allow you to know roughly how much it would cost, and then you can factor that as part of your budget. Number 4, know roughly how much your property has gone up by. Very important. Again, if you bought the property, suppose you bought this property about £100,000 maybe two or 3 years ago, that property may have likely gone up by about 10 or 15%. So again, if you do your due diligence, you can roughly know how much it has gone up by probably looking at what has been sold recently in your area. Or you could go to Zoopla, go to house prices, and then search on that basis. You can see roughly how much your property has gone up by. Or you could do Rightmove, or you could actually get a valuation officer to come around and value the property for you, because he will value the property and he will tell you exactly how much he thinks that property worth in the current situation. Or you can get a sales agent to come and value the property for you. Again, with sales agent, they tend to literally inflate the prices. They tend to make the prices higher so that they would attract you to be able to sell their property through them. And again, what I tend to do, if I do that, I'll ask them, they will give me the price, how much I may be able to sell it, and then ask them, if I were to sell this property in 3 weeks, how much do you reckon I'll be able to sell it at? They will come back to the actual figure I'm able to sell the property. So again, I tend to use that figure as the value of how much my property has gone up by. So again, very important for you to do that, because then that puts you in a better position and you can roughly know how much money you'll be able to pull out of that property. Number 5, just before the remortgage happen, do any maintenance work. Presentation is key, and make sure your property is clean, okay? Any maintenance work, whether there's a damp or anything it is in it, even if it's tenanted, you go do a maintenance work, make the property nice and presentable. Tell the tenant to clean the property, make it presentable, because once it's presentable, it's really nice and tidy, it makes the valuation officer feel like the property is more value, especially if the furnitures are nice, because they will consider the furnitures in the property as well. So very important for you to ensure it's really, really, really literally set up nicely, no outstanding maintenance work, it's been presented nicely, and get to be in the appointment. Because the reason why it's good to be in the appointment, you can convince him. What I normally do in my remortgages, or when I'm doing my mortgages basically, is to do my own due diligence, right? I will come with a pack of comparable properties, rental and comparables, and what I think about the property, and hand it over to the valuation officer. That has helped me drastically, right? Basically making their job a lot harder, because that's what they would do. When they go back home, they'll do exactly that. Give them that information. All they do basically just to go and cross-check what you said. And then if you did any maintenance work or any renovation works, have the list of renovations work you've done. List it, the prices and how much it cost you in total. If it happens to have the receipts, print the receipts as well. Print the receipts, put it in a pack and hand it over to him. Then he can see you've done exactly what you've said, and there's evidence for it as well, which means you've added value to the property. Number 6, don't forget the external of the house. Very important. If you have to do any maintenance work there, do it. If you have to paint the windows, or you have to clean the windows, have to paint the front of the house, paint it, because paint make the property looks new, and obviously makes you feel like you worked into a nicely renovated property. So again, very important. Make sure the external of the house, the garden, the brickworks, the extension if you have one, and if you have a barbecue machine at the back, make sure it's all clean and tidy. Just make sure the house is really, really presentable, so that it feels like it's gone up in value. Okay, that's what you want to get. And again, speak to the agent or to the valuation officer if the bank send them over, to tell them, listen, what you've done, explain to them how long it takes you and what value you've added. If you added a new bathroom, tell them about a kitchen, tell them whatever you've done to the property, tell them, and then obviously provide them with the evidence. Okay. Number 7, respond to the lenders quickly. Okay, once the process start going, if they have any inquiry, respond to them straight away, because sometimes it will keep dragging on and on and on and on. So if we ask any question, whatever you're doing, basically take a break, answer the question, take a break, answer the question. Because if you're answering the question, you will be moving forward. Because what they do, if they send any information to you and you haven't replied for about 2 or 3 days, even if you reply, it takes them about 2 or 3 days to go and look at the case file. So what you do, if they hit you with an email, you reply straight away, they will literally action it straight away. So again, very important for you to be responsive when it comes to the lenders, to ensure you go through it quickly as possible. Okay. And number 8 thing also you need to do basically is the end. Sign the contract and close the deal. Okay, sign the contract. They will send you a decision in principle. Make sure you read it. You know what the interest rate is, what the monthly mortgage payment is, how long is the mortgage term, and how long is the renewal term. So again, you need to know all this. So why, once you know that, then your renewal term, you can book that in your calendar. So what then happens, you set a reminder, a month or two reminder. So when it comes in, when it comes to renewing it, you automatically get reminders from your calendar so you can take the process forward. So again, this is what you do. Again, these are the 7 things you need to know when you're remortgaging or refinancing your property. I'll repeat them again. Number 1, understand your credit score. Know your debt to income ratio. Right, what's your refinance cost? Number 3. Number 4, know roughly how much your property has gone up by. Number 5, do any maintenance, any repairs that you need to do before the actual work. And number 6, the external of the house, make sure it's really nice and presentable. Number 7, respond to the lenders as quickly as possible. And then number 8, sign the documents and close the deal. I really hope this episode has been helpful. If it has been helpful, don't forget to hit the like button below. Subscribe to our channel for more of these amazing tutorials. Thank you so much for listening, and I look forward to sharing the next episode.